how is your TAP annuity going to be taxed? And how is the TAP annuity going to affect your other benefits? That's what we're going to be talking about today. So if you're interested in the TAP annuity, you should probably already know that it's an annuity that you can purchase from DRS. It's only available to members on Plan 3, and it gives you essentially another pension. That's a lifetime income benefit that comes with a guaranteed 3% cost of living adjustment. If you've attended any DRS event, I'm sure they're very long-winded on this topic, and they really like promoting it. Now, while this benefit is great, it's important to remember that with higher income means higher taxes. And taxes are a key element that DRS often leaves out of their conversations. And if you go to their website for tax information, all they say is to contact a tax professional. So don't worry about that. I got you guys today. I'm going to go in depth on how the TAP annuity actually gets taxed, and as well as how it's going to impact benefits like Social Security and your Medicare. So when we're funding the TAP annuity, the money has to come from our defined contribution plan, right? That's that Plan 3 bucket of money you've been saving into ever since you started working for the state. So any amount of that money can be moved over into the TAP annuity. So because the TAP annuity was funded with pre-tax dollars, any distribution that comes out of there is also going to be subject to taxes. So when you start your TAP annuity, at the end of your first year, you're going to get a letter from DRS. It's 1099-R, and it's going to give you all the tax information, how much income you received from the TAP annuity, as well as how much of it was subject to taxes, which is going to be, for the most part, all of it. All right, so this is the exact same way that your pension is going to be taxed, your Social Security tax, or any other distributions from pre-tax assets. They're all going to be taxed in this manner, and you're going to receive the same tax forms. Now, the biggest thing here isn't just that you have to pay taxes on it, is how is it going to impact your other benefits? So remember that because we have the TAP annuity coming in, our income is now higher. Depending on where Congress makes the tax brackets at, this TAP annuity could be the final straw that pushes us over into the next tax bracket, right? So your net benefit, if that happens, would actually you see a decrease, right? So if you were planning on getting, $3,000 a month is what you need to survive on, and all of your pre-tax assets added to about $4,000 per month, you figured $1,000 for taxes, you net $3,000 to be covered. If taxes change and they go up, your net benefit that you're be getting from all those benefits will be under $3,000. Then you're going to have a shortfall on hand. And that's why it's a good idea to keep other cash assets on the side to cover events like this. Taxes are a key part that can change in retirement, and you need it to be part of your plan. So if it comes to doing tax planning strategies, such as something like a Roth conversion, because you have this TAP annuity payment coming in, our income is then higher, it shortens the amount of money that we are allowed to convert without jumping brackets, right? So for example, if the tax bracket changed at $100,000 and your Social Security and your other pensions added up to $50,000, you would have $50,000 of room to do a Roth conversion, right? Without jumping brackets in that sense. If the TAP annuity payment is another $10,000, now you only have $40,000 of room in that case. And because your TAP annuity is subject to increase at 3% every single year, that window is going to shrink. Now, thankfully, there are cost of living adjustments for tax brackets, but remember, tax brackets are all written in pencil. Brackets can change, tax rates can change, standard deductions can change. There's all kinds of things that can change when it comes to taxes. So that's just one thing to watch for with the TAP annuity. Now, as far as how does it impact your Social Security, this is a big one that a lot of people aren't going to see till a couple years down the road. So remember that Social Security has its own tax system. Yes, you still pay federal taxes at the federal tax rate, but how much of it is subject to tax is based off of something called your provisional income. Your provisional income is where they take half of your Social Security benefits, they add in any other taxable income. So they're going to add in all of your pension, plus all of your TAP annuity and any other distributions or earned income that you have. They also include dividends and interest payments that you received in this as well. So they add all of that up. And then they have their own brackets. And these brackets have not changed since the 80s. They did not justify cost of adjustment at all. So they're quite low. So the impact is that as people's retirement has gone up over the years, more and more of their Social Security has been subject to taxes. So Social Security essentially has three brackets. They have a 0%, a 50%, and 85%. Now, those percentages are just how much of your benefit is subject to taxes. That's not the tax rate. So if you're in the 50% bracket, it just says that half of your Social Security is going to be subject to taxes at whatever your tax rate is. So because the limits are set where they are, currently at $44,000, If you have more income than that, it essentially pushes more of your Social Security becoming subject to taxes, which, depending where tax rates are, can leave you with a net payout that is less than what you're used to because you have this TAP annuity that kicked in. So that's just one way that you could potentially see a decrease in Social Security payments because of the TAP annuity election. Another way that this TAP annuity can impact you is when it comes to your Medicare benefits. So when it comes to Medicare, they actually base your premium off of the income that you made 2 years ago, right? So they have income brackets set in place. And if you exceed that bracket, you have to pay an increase in Medicare premiums for the next year. And remember that this increase is both for you and your spouse. So it changes every year as far as how much it is, but there's a couple of different brackets and income points that you have to watch for. So if you're not careful and you're really close to those limits between you and your spouse's pension, Social Security benefits, and what you're taking from other retirement accounts or even rental properties, your income is right under those limits. If you decide to do the TAP annuity, you could push yourself over these limits, and it may not impact you this first year because they're going 2 years back, but in a couple years down the road, you could see your premium of your Medicare go up. And of course, no one gets a bill for the Medicare because they take it from your Social Security benefit, but you're going to notice that your Social Security might have a net loss on it, depending on what cost of living adjustments are, right? So that's kind of sneaky when they hide it in that way, because your Social Security cost of living adjustments, but Medicare changes, sometimes they can offset, and you can be left with less benefits, right? So those are just some things you want to look for. So the Medicare thing is called IRMA. If you want to look it up, those are some income levels or thresholds you want to look for. So before you just dive into the TAP annuity, you want to look at these other factors as well. Of course, I'm a big fan of the TAP annuity. I have never seen any private annuity come close to paying the same income level it is. So if you're in truly need of more income, then this might be one area to go, but you should also consider the impact it's going to have on your Social Security benefits, as well as your Medicare, any potential tax strategy that you want to utilize. All right, so I hope this video was insightful. Make sure to hit the like button, share it with a friend, and of course, subscribe so you don't miss future content like this. I'll see you guys all next week. Remember that your future depends on what you do today.